In the dynamic world of investing, equity mutual funds has never disappointed the investors. Recent analysis by Economic Times Mutual Funds has unveiled a select group of equity mutual funds that have achieved an impressive returns over 30% CAGR within 3 years. Among the 209 equity mutual funds that completed 3 years in the market, these 15 funds emerged as champions, showcasing exceptional performance across various categories. Today we are going to have a snapshot of these top 15 mutual funds that outperformed last 3 years. Canara Robeco Small Cap Fund is at the 15th place with 30% CAGR, showcasing its ability to deliver consistent returns within the small cap space, and has a very good expense ratio of 0.51%, which is quite cheaper, and fund size at 9,400 plus crores, and it has given about 42.59% in the last 1 year and 30% in the last 3 years by time frame. HDFC Midcap Opportunities Fund is at the 14th place with 30.1% CAGR. In fact, from the midcaps perspective, segment perspective, reaffirming its position as the top performer in the segment, investors have benefited from its focus on mid-cap growth opportunities in particular, and this fund has little higher expense ratio at around 0.75, and the fund size is quite huge, 60,000 plus crores has already crossed, and it has a very good CRISIL rank, a 4-star CRISIL rank, and it has given about 55.45 in the last 1 year, and of course benchmarking come almost close to the benchmarking or above the benchmarking in terms of overall return. Bandhan Small Cap Fund is at the 13th place with 30.13% CAGR, which has a very cheap expense ratio at 0.43%. Fund size is also small in terms of 4,384,000 crores. CRISIL rank is good, 4-star CRISIL rank, and this fund has given an outstanding 1 year returns about 76.28%, and from a 3 year perspective 30.13. So this is kind of coming up from the last year perspective. This is one of the best among the small cap category. Tata Small Cap Fund at 12th place with 30.73% return, which has given an outstanding performance in the last 3 years, and from a 1 year perspective 47%, quite decent, and this has a very good cheaper expense ratio, just 0.29% is the expense ratio, and fund size is about 6,200, so a lot of legroom to grow, and CRISIL rank is at 3-star. So this is an attractive fund in the small cap area to really keep it at the watch list. Quant ELSS Fund is at the 11th place with 31.16 CAGR, and which actually focuses on equity linked saving scheme, and this has delivered an attractive tax saving benefits along with commendable CAGR. Investors have leveraged its growth potential while also enjoying the tax advantages. So this fund has an expense ratio about 0.76%, moderate to higher, and the fund size is about 8,300 plus crores, and the CRISIL rank is also good, 5-star CRISIL rank. This has given about 61.8% outstanding performance compared to the benchmark, and also given 31.16 from a 3 years perspective. Nippon India Multi-Cap Fund has given 31.19 CAGR, and it has an expense ratio on a little higher side, 0.79%, and the fund size is about 27,700 plus crores, and CRISIL rank is 5-star, which has given a very good return in the last year, 52.87%, and of course for the last 3 years about 31.19%. SBI Contra Fund is at 9th place with 31.68%, and this fund expense ratio is decent, 0.65%, and size of the fund is about 26,700 plus crores, and it has a very good CRISIL rank at 5-star rating. And of course last year it has given about 50%, and really beating the benchmark in this category. And of course last 3 years it has really crossed that 30%, 31.68%. HDFC small cap fund is at the 8th place with 31.82% return, and its expense ratio is quite good at 0.58, quite cheaper, and which has a fund size about 27,500 plus crores, and CRISIL rank is 3-star. And of course this has given a 51.55% in the last 1 year, and also compared to other smaller cap it is a little less, but however this has given a very good return from a 3 years time period. Franklin India Smaller Companies Fund is at the 7th place with 32.49% CAGR. This fund size is about 11,539 crores, and expense ratio is on the higher side, 0.92. Of course this is a high risk fund and also having a good CRISIL rank at 5-star rating. And this fund has given a very good return in the last 3 years time, and in the last 1 year about 58.707%. Quant FlexiCap Fund is at 6th place with 32.74% CAGR, and its expense ratio is quite good at 0.68%, and the fund size is about 4,600 plus crores, which is quite having a lot of headroom to grow. And of course there is no CRISIL rank. This is more like a recent fund, and it has definitely given about a very good benchmarking performance in the last 3 years as well as in the last 1 year with 61.31%. HSBC Small Cap Fund is at 5th place with 33% CAGR, and its consistent performance and ability to generate attractive returns within the small cap space is proven. Investors have benefited from this fund's focus on high growth potential companies, and of course it has given 49% in the last 1 year, and has a decent expense ratio of 0.7, and CRISIL rank is 3, and of course this is yet another small cap fund. Nippon India Small Cap Fund is at 4th place with 35.05% CAGR. Of course this fund size has really exceeded 50,000 crore fund size and has delivered commendable growth. As the largest scheme in the small cap category, it has demonstrated resilience and agility in capturing growth opportunities within this segment. Of course this fund is not available for lump sum investments, and it was stopped last year June-July time frame itself, which has really given an enormous return for mutual fund investors, and last 1 year it has given about 56% overall, and this has a 5-star CRISIL rank. The third fund is again from the Quant Fund House. Quant Midcap Fund secures its position with a robust 35.34 CAGR, reaffirming the potential for growth within the midcap space. Investors have benefited from the fund's strategic investment approach and ability to identify promising midcap opportunities. So the fund has a nominal 0.7% expense ratio, and of course it is not overcrowded, meaning not so many investors have flooded there. It is close to 6,000 crore fund size, and of course the CRISIL rank is also good, 4-star, which has again given 68% in the last 1 year, beating the benchmark, and of course it focuses mostly on mid-cap opportunities. The second mutual fund is Motilal Oswal Mid-Cap Fund, which has given 36.78% in last 3 years, and which is having a very good expense ratio at 0.61%, which is quite cheaper, and also having a CRISIL rank of 4-star, and has given 61.25% in the last 1 year, definitely beating the benchmark. And Of course, it's a mid-cap fund. Quant small cap fund is the number one fund in this 15 funds, leading in the pack with about 40.02% CAGR. And this fund has capitalized on opportunities within the small cap segments, delivering substantial returns to investors. So this fund has an expense ratio of 0.7, which is good, and despite being the top fund in the small cap category, which is still having a lot of room from a fund size, because it is currently about 17,000 plus crore invested. So there are a lot of chance that people would continue to invest in this fund, which has a good CRISIL rank, which is 4-star. And of course, this is a high risk fund. So the 71.76% in the last 1 year is the outstanding and benchmarking result in terms of its performance, even compared to its benchmark in the current small cap category. In conclusion, these 15 equity mutual funds stand as shining examples of exceptional performance, defying market norms and delivering impressive returns to investors. So overall, these 15 funds have given outstanding performance. 8 out of these 15 funds are small cap, 3 are mid cap, and there are 1 each on flexi cap, contra, multi cap and tax saver. Interestingly, 4 top funds are from Quant Fund House, 2 from HDFC and 2 from Nippon India. So it's very important to look at these fund houses. They have multiple performing mutual funds, and we should not blindly go with all these small cap funds, because last 3 years all the companies in India have performed so well, especially after the COVID recovery. So these kind of performance is not always promised for a long term, and when we get into these kind of war time in the current scenario like 2024, there are chances these small cap companies might lose its market position, will lose the declining effect of all these market conditions. So when the rebound happens, the large cap companies will rebound faster and it will be more stable compared to small and mid caps. So we should always mind about diversification, should not blindly put all the money in one basket, and diversify at least across 4 to 5 different mutual funds. One last caution: while past performance is not indicative of future results, these funds' track records underscore their potential to generate wealth and create value for investors over the long term. As investors navigate the complex landscape of mutual fund investing, diligent research and a clear understanding of individual financial goals remain paramount in making informed investment decisions. Hope you enjoyed this video. Thanks for watching. Please subscribe if you have still not subscribed. And I am not a SEBI registered financial advisor, so I am not recommending to buy or sell any of these mutual funds discussed in this particular video. This is just created for awareness, and please consult your financial advisor. And if you like this video, please click the like button and share your comments if you want to have any particular detailed analysis of any of the mutual funds.